Coming up on Market to Market. Big oil comes under fire over blending waivers. Again. Louisiana businesses help shore up the Gulf Coast. And market analysis with Sue Martin. Next.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, May 25 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Paul Yeager. Delaney Howell is away. Spring is a time for planting both crops and houses. However, like the supply of grain, the supply of houses is dwindling. Keeping with the trend, sales of new homes tailed off 1.5% last month. Limited listings and rising prices also affected sales of existing homes as the number of units sold declined 2.5%. Orders for durable goods fell 1.7% in April, mostly on the drop in orders for civilian aircraft. Without transportation in the equation, orders rose 0.9%. And the Fed appears to be on track to raise interest rates. FOMC minutes released this week said a rate hike would, quote, likely soon be appropriate. A rate hike for gasoline prices has occurred just in time for the beginning of the driving season. Much of that fuel is blended with a federally mandated amount of ethanol. And there are a few trying to avoid mixing the predominantly corn-based fuel. For some, this tugs at the spirit rather than the letter of the law. The biofuel hardship waiver was in the news again this week. Reuters reported Marathon Petroleum asked the Environmental Protection Agency for a hardship waiver to eliminate its obligation to comply with the RFS. The nation's second largest refining company made the request in 2017. It is unknown if the request was granted.
Well, the House defeated their farm bill.
Charles Grassley, the senior senator from the nation's #1 ethanol-producing state, Iowa, tweeted his response to the report. Note to EPA, definition of hardship, a condition that is difficult to endure, suffering, deprivation, oppression. Surely Marathon doesn't qualify for a waiver. They had a net income of $3.4 billion in 2017. Billions in profits isn't hardship.
But I did not expect the work to be easy, and I knew there would be meaningful opposition.
Grassley and EPA Administrator Scott Pruitt have recently clashed over what appears to be an increase in granting of biofuel waivers. Grassley repeated his thoughts this week, saying the process is broken. The EPA restricts access to the list of companies that apply or are granted waivers, citing the information is confidential. The Mississippi River is both ecosystem and interstate highway. Some businesses using Mother Nature's roadway are characterized as being concerned only with the bottom line. But in more than one case, that description misses the mark, especially for those protecting an asset that carries 92% of the nation's agricultural exports. John Torpy has more in our cover story.
A majority of commodities produced in the U.S. will, at some point, end up at the mouth of the Mississippi River in Louisiana, on their way to other ports of call. And while Louisianans are proud to be one of the most important shipping centers for the country, the commodity those living and working along the river would really like to see stick around is land, and lots of it. Around the turn of the 20th century, levees were constructed along the banks of the Mississippi River to control flooding and improve navigation. But without a constant supply of fresh water and sediment from the river, salt water from the Gulf has decimated the marshes and wetlands, turning many areas of the coastland into open water.
Our wetlands have been sacrificed for navigation, Mississippi River, and also for oil exploration, provide energy for the nation and industry for the nation. Well, the nation needs to help us to save our coast, because if not, where you're sitting now will become the new barrier island.
Because of this coastal loss, multiple industries in Louisiana have become more vulnerable to damage from hurricanes and storm surge that could impact the nation's economy as a whole. Along a 54-mile stretch of the Mississippi River, set between the cities of Baton Rouge and New Orleans, is the Port of South Louisiana. Over 290 million tons of commodities flow through this area annually, making this landing the largest tonnage port in the Western Hemisphere. But the port's strength in global shipping is slipping. Rising sediment levels at the mouth of the Mississippi River can restrict the amount of cargo a ship can carry to and from South Louisiana. Industry leaders from the port have petitioned the White House for funds to dredge the mouth of the Mississippi River to a depth of 50 feet. Material recovered would be diverted to areas along the coast to help restore wetlands and marshes in a practice labeled beneficial use. In 2017, President Trump announced a $1 trillion infrastructure proposal that included money for waterway infrastructure improvements in Louisiana. Port officials hope the president will push for permanent annual funding for dredging the channel of the Mississippi River.
These countries that are buying our grain will find another place to buy it that's more reliable and more competitive. So it's very important for the entire country to understand that dredging the mouth of the river is a national problem, a USA problem, not a Louisiana problem.
Beneficial use of dredging material to replenish the wetlands and marshes of coastal Louisiana is part of a multi-pronged approach to help restore parts of the Pelican State's coast. Responding to hurricane recovery efforts in 2005, the Louisiana legislature organized the Coastal Protection and Restoration Authority, or CPRA. The agency was charged with developing a set of plans that would address hurricane protection and coastal restoration. Every 5 years, the group delivers their master plan to the Louisiana legislature. For the 2017 Coastal Master Plan, 120 projects were proposed to create and maintain land along the coast. One of those projects is located at the Caminada Beach and Headlands. Over the past 5 years, work has been done to rebuild a beach crucial to birds and create a barrier protecting an important oil and gas industry port from extreme weather events.
This beach right here, this beach in Headland, is the first line of defense from storms. And if you can provide that protection here, then that helps to protect the interior parts of the basin where the majority of our population lives.
Oil and gas industry leaders, government officials, and wildlife experts brought together by CPRA worked to design and rebuild the beachhead using funds from the 2010 BP oil spill settlement. But the plan was missing one ingredient: sand. Planners made the decision to pull the key element from two sources.
So here in Louisiana, we have a resources problem. We have a problem with we don't have enough natural resources sometimes to help restore the areas that we need. So we really need to get that resource from outside of the system, whether it's sediment from the Mississippi River that makes it the muddy Mississippi River, or if we have to go offshore to mine sand to put on this beach. We need new material.
The beachhead built with newly mined sand protects Port Fourchon, which services 90% of the oil and gas operations in the Gulf of Mexico. Roughly 1.5 million barrels of crude oil flow through the pipelines at the facility each day, making Port Fourchon responsible for roughly 18% of the nation's energy supply. While business in the port may be booming, land mass continues to shrink, forcing commissioners in Lafourche Parish to think environmentally in order to survive economically.
We're actually going to rebuild an area in and around the port. So when we dredge to create a slip, we're building land both for industrial development, but we're also, as well as building land for a marsh creation.
Even as businesses along the Mississippi River are finding ways to help alleviate coastal erosion, more land continues to slip away. State officials estimate that without further work, Louisiana could lose 2,250 square miles of coastland over the next 50 years.
We're not ever going to take down the levees of the Mississippi River. That's not going to happen. We know that. We're not going to do anything that's going to impair navigation and ships, along our ports and our river, because that is vital to the economy of the entire United States.
State officials hope the move will speed up the federal permitting process, helping greenlight coastal restoration projects in the 2017 master plan.
The sense of urgency here is definitely heightened, and that we have this small window of opportunity to do as much as we can. And maybe we are just holding the line, but that's important to us here.
For Market to Market, I'm John Torpy.
Next, the Market to Market report.
Strikes in Brazil, Chinese reaction to a canceled North Korean summit, and a trade war on hold made for gains in the commodity markets. For the week, July wheat jumped a quarter, while the nearby corn contract added 4 cents. Chinese buyers returning to the fold pushed the July soybean contract up 43 cents. July meal rose $4 per ton. In the softs, nearby cotton stretched $2.66 per hundredweight. In the dairy parlor, June Class 3 milk futures gained 2 cents. The livestock sector gained ground as the June cattle contract bumped up $4.07. August feeders put on $7.30, and the July lean hog contract finished 30 cents higher. In the currency markets, the U.S. dollar index climbed 59 ticks. Crude oil slid below the $70 mark, losing $3.49 per barrel. COMEX gold was up $4 per ounce. And the Goldman Sachs Commodity Index dropped 7.5 points to settle at 481.70. Joining us now to offer insight on these and other trends is one of our regular market analysts, Sue Martin. Sue, welcome back.
Thank you. It's nice to be here.
I'm actually using the wrong phrase. I should be saying Merry Christmas, and I feel bad I didn't get anything for you because these markets right now seem like a major gift for producers. Do you read it that way? Let's start with wheat.
Maybe it's a gift that keeps on giving. I look at wheat, and we do have some weather involved. Yes, we went through, and I think we've priced in our hard red winter wheat areas for now anyway. If the yields, when we get the combines rolling, in our hard red winter wheat is below the 37 estimate by the wheat tour, then we might get another surge off that. I think more than anything, it's global weather that's affecting us. We have the latest, of course, being the Black Sea, former Soviet Union. They're having some issues there, and their estimates are dropping. It seems like this week we heard several estimates where the production and the export estimates dropped.
And that was deemed supposed to be the great addition to the market was what they could do in the Black Sea region.
Well,
and now you're saying a weather scare all of a sudden puts a change in the market.
It has changed it. And last year they had record amounts of exports. So this year's a total different situation for them. In the meantime, you've got the Ukraine, and they're dealing with hot, dry weather as well. So, and we're not into the corn time for them. Then I would say that the market here appears like we're basically I would have to say we're looking at that, but we're also wondering about, Argentina's wheat.
Yeah.
I would say their wheat might be able to be into good start because of the moisture they got here recently. Brazil's wheat, maybe not so much. They're dealing with dryness. I just think that we're looking at an interesting time. And, you look all the way down to Texas, and it's dry, and then Canada. I got to tell you, Paul, I looked at a Storm Vista weather map today, and it was a appalling 1 to 5 day forecast of heat, and it goes way up into Canada, covers most of Canada, all the way down to the upper third at least of Mexico and much of the U.S. And where do you think the hottest part of it is?
Probably right here. It sure seems it's going to be warm this weekend again.
Absolutely. It's actually right where all the wetness was.
Oh.
Those that were really wet, southern third of Minnesota, northern third of Iowa, part of South Dakota is where the most intense heat's going to be. But then surrounding areas in a large portion, all the way down to Texas, very hot. It was amazing to look at that map.
All right. Well, that is something that's also impacting the corn market a little bit. If you don't have your corn in, I guess it's baking the water and turning it to steam. There is a band that is not planted yet, north of Iowa, northern Iowa, southern Minnesota, Dakotas. Glenn, a big friend of the show in Ohio, he was just getting back into the field for the first time in 28 days today to plant corn. When do we think this preventative planting might happen and flip from corn to soybeans, and will that have an impact on the market?
Well, I think it's kind of interesting that you asked that because, for example, in Iowa, May 31st is when the prevent plant date goes into effect. If you have insurance that's 85%, you might then maybe be willing to take the prevent plant, but if you have a percentage that's less, say 65%, you're going to probably plant a shorter variety of corn, and you're probably going to switch over to beans. Right now, beans are looking a little bit more profitable, although with $4 cash corn, there was a cash corn in many places this week, might entice people to do that. Otherwise, they'll move into beans. We've seen corn going in many times in June. They might go to beans, but I think prevent plant is the very least amount that we could see here happening.
That necklace, they're telling me, and it looks wonderful. I
apologize.
just have to say, so if you see me tugging on my coat at home, that's what I was doing, sorry. Let's keep going with corn. And the reason we need to keep going with corn, because the acres that we're discussing that aren't planted, that's not a big enough thing to move the market. So what really is?
Well, I think when we get our planting progress report on Tuesday, I think it's going to show that we're over 92% planted. We might be closer to 95. So they're not worrying about the smaller area. To them, if that's smaller areas.
Right.
But I think what's more important is you look at all the downsizing of Brazil's corn and the safrina. And this week, Agro dropped, I think, almost 3 million metric tons down to 57 million metric tons. That's down just shy of 11 million metric tons, what they were producing last year. And I think in the meantime, that was like, well, how do I want to say it? That was a frosting on the cake, so to speak, because Argentina, we don't hear much about Argentine corn, but to be honest with you, they're a major exporter of corn.
Right.
Brazil, they vie for those two, fight for second and third, and now you've got the Black Sea, Ukraine coming in there. Should the U.S. have an issue? Does it have to be in Iowa, Illinois, Indiana? Maybe not. What about Kansas, southern Nebraska, Kansas, Oklahoma, and West Texas? I'm not kidding. The temperatures for like West Texas, there's over the next 5 days, maybe 10 to 15 days, there's several days peppered in there with triple digits.
Before we leave corn, is it time to make a sale? On new crop. Let's go new crop first.
Okay. If you got, I think there was a lot sold this week by farmers because they could finally have net a cash price of $4. And I understand it. It's been a long time since we've gotten that. And they're in a year where they don't dare make mistakes. The mistake this year is you might sell it too soon or too cheaply.
Really?
So anyone that is marketing this corn at $4, I don't know how I could say it, but be sure to have an insurance policy against it, buy some calls, and get yourself protected, because I don't think we're done yet. And I think you're in an evolving bull market. The bottoms are in. I'm very, very bullish corn.
How about soybeans? You in that same camp for soybeans?
Well, I'm not as enthused about beans.
The bull isn't as big?
Yeah, the bull isn't as big, but it's not going to probably push down as much. Granted, and there's one thing I got to say, and wheat might be a weather market, corn may be a little bit of a weather market. I think people are missing the boat here. We are in demand-driven markets. I think the supply side has gone by the wayside. The thing about demand-driven markets are that, and beans are in this, but the thing about demand-driven markets are they start off with the first phase of anticipation or anticipatory. And demand markets are hard because, you know, supply, you can look at it and see it. It's easy to quantify. Demand is elusive and it comes and goes. And so when you first get going, people are in disbelief. All they can talk about is how much supply we've got. And in the meantime, the market just kind of, you get some negative news, it might take a little bit of a breath and then it's moving on again. And it just sort of stair steps and moves slowly. Corn would be classic at this. And then all of a sudden, when the proof is in the pudding and it is so blatantly obvious, then the whole world says, oh, we're in a demand market, and the realization hits, and that's when the fireworks take off and run. Are we there for something like that this year? I think that might be next year's story, but I do think we're in an anticipatory bull market that keeps chugging and pushing this market higher. And the brakes are opportunity. Livestock producers need to be booking corn.
Because before it gets out of hand. Soybeans, I need to put a bow on that one. 10.53 was the November. On new crop, would you be making a sale?
Well, in our website, we're 40% sold with nothing under $10. Most of it's $10.30 or higher. I think I would wait. Let's put it this way. November beans have taken out last year's high. The old crop has not. But you look at China, and they're looking at expanding their reserves. China in Heilongjiang and Inner Mongolia are looking at expanding bean acres by a third. They're really making efforts, and there's many provinces like Jilin and others where each state has its own government, and they have to go out and tell people to plant beans. They're really adamant about this. Supplies for meal are tight in China. And of course, granted, soy meal in Argentina is cheaper than U.S. meal. And therefore, what's happening is we've got our meal market percolating. Now, that said, Argentina is feeling a lot of financial stress, and their interest rates are 40%. And the farmer is hanging on to his beans because he's using it as a hedge against inflation. Argentina has reached out to the IMF, the International Monetary Fund, for help, financial help. And the International Monetary Fund is saying, you need to raise your taxes on farmers. And that's not a palatable thought process.
No, not really.
But if they have to do that, and remember, taxation on beans, the last I knew, was still at 30%. So therefore, the farmer's going to hang on. If you raise his taxes, he's going to hang on even tighter.
All right, hold on just a moment. Ernest, Phil, Tim, and Brian, we will answer your questions that came in via Twitter and Facebook and Market Plus. Sue, I need to move rather quickly into the livestock complex. Cattle on feed report this afternoon. Cattle and calves, 11.6 million head. That's 105%. Second highest May 1st since 96. What's that telling you right now?
Well, I think that, the placements was pretty much, maybe a hair over what we expected. But, what's interesting is when I look at the cattle on feed report, to me, it was kind of a yawner. I think.
All right.
What's more important to me is in the cattle market, in April up to May 1st, animals weighing 600 pounds or greater at the auctions was down 26%. At the videos, they were down, I want to say, 19%. And then you look at maybe 17 or 19%. Then you look at animals that are feeders coming in from Mexico, down 29%. Coming in from Canada, down 17 or 19%. That speaks volumes. And then you look at animals weighing 100 or on feed 120 days or greater, around 21% up from the year of 2012. And I thought that's the second highest since 2012, and that was a year where we had high corn prices and hot weather.
Right.
And what was interesting was cattle did almost identical what they're doing this year. We put a high in February, a low in April, bounced a little bit, kind of looked at it, and then away we kind of just started chugging. Junes didn't go very fast. They were kind of like a plodding, reluctant child, but they moved higher. And then, maybe sideways higher. And then the August took off, and it moved and made higher highs for the calendar year.
All right. Now, I have to be the reluctant child here and say real quickly on hogs, you have like 3 seconds. Are we headed higher or lower on hogs? And we'll talk more in plus.
Oh, goodness. Hogs are coiling.
Coiling. What a tease, Sue Martin. Thank you so much. That's a good term. I like that. We'll unpack what coiling means in just a little bit. Thank you so much, Sue. That does wrap up the broadcast portion of Market to Market, but we will keep that conversation going in the aforementioned Market Plus, where we'll answer more of your questions. You can find it on our website at iptv.org/MTOM. And you know what? Spring is a beautiful time and a great opportunity for a photo. Tag us in your Instagram post at IPTV Market, and we'll repost it for others to see. And you know what? Join us again next week when we explore how the Canadian dairy industry manages to stay in the black. So until then, thanks for watching. I'm Paul Yeager. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content.
Wherever your operation takes you, or who you share it with, we'll be where we've been all along. With you from the word go. Proud sponsor of Market to Market.
Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.